Phil, how you doing?
I'm doing good, thanks. How are you?
Very well, thank you. Very well. So I know you've been slightly reluctant, I guess, for a little while to do a collaborative effort such as this one. But
Yeah,
before we get into maybe why you're a little bit hesitant or so, can you just give us a brief introduction into who Philip Swift Positive Crypto is?
sure. So I am Philip Swift, founder and CEO of Trendstorm, which is the business behind Bitcoin Magazine Pro, which is a Bitcoin data analytics platform. So we help people understand Bitcoin better through data. Uh, People might also know me as at Positive Crypto on Twitter, though I don't tweet that often really, and also maybe from some indicators that I've created over the years. So Pi Cycle Top Indicator, which became very popular last cycle, to say the least. I'm sure we'll talk about that later, as well as some on-chain metrics like realized HODL ratio and other metrics like that. So basically, I'm a data geek, Bitcoin data geek, who I think works in what is the most exciting industry in the world right now.
Very nice. I can definitely say the same. So just a quick thing, you've been anonymous up until this point. You've just had a little bird as your icon and everything. Why is now the time to reveal yourself to the world and join me on a lovely little discussion?
Well, partly because you kept on asking me, and I started to feel bad.
Okay.
That's part of the reason. But no, I think, if anything, it's because I've never done it previously, because I always wanted the website to be judged on its own merit rather than whoever I am. And I think that's sort of quite a sort of Bitcoin ethos, right? It doesn't matter about the people behind it, it's about the proof of work, right? And I wanted it to be about proof of work. So that was the main reason why I'd never really have done anything like this. But I guess I am increasingly frustrated with the poor quality commentary we see on crypto Twitter, right? And given that we're at what I think is quite a pivotal point in the market, with the bull run coming now, I thought, you know what, let's have a decent discussion and see what's really happening. And hopefully people will be able to take something from this that they don't get from some of the nonsense influencers they see on Twitter.
Fair enough. Well, that works for me. And before we get into, I know you said that we might be on the cusp of a reignition of the bull market and everything. So we'll save those questions for a little bit later. First, how did you actually get into Bitcoin data and on-chain analysis and that type of thing?
So my background is in economics. So I studied economics at uni, which was useful from I guess, for doing Bitcoin analysis from a technical competency point of view. But it was also useful in me realizing that traditional economics is in no way useful for the real world. And it's really an exercise of mathematicians failing to connect with real people. I think if anyone who studied economics probably kind of knows what I'm talking about. So I studied that, realized that traditional economics wasn't going to be my thing. It was more behavioral economics. And so then career-wise, that's where I focus. So helping companies understanding what's happening in their market, and then getting their CEOs, board members to change strategy based on that. It's called consumer insight strategy, but it's basically behavioral economics. Did that for a few years, which was good. And that also helped inform, I guess, getting into Bitcoin. But really how I got into Bitcoin was just, I was looking for something else that was probably had a greater purpose than the drinks industry, which is where I was working at the time, helping brands like Jack Daniels, Grey Goose, whatever. And I thought, this isn't making me feel particularly passionate. I want to do something else. And I came across Bitcoin, and I just realized straight away, I guess, two things. One was massive asymmetric risk reward opportunity from an investment point of view. I was like, wow, this is still so early here. It was 2017. And then also just realizing that Bitcoin's probably like the most important innovation of the 21st century. And I still believe that today. So that's kind of, I just kind of came across it. But then as soon as I came across it, I like poured over it and sort of fell in love with it very quickly.
Nice. And then you became a somewhat influential name in the space, founding a data and analytics platform, previously known as Look Into Bitcoin. How did that start? Did you just see a gap in the market and not really people providing the data that you wanted to see? Or did you have your own metrics that you wanted to provide to the world? How did that come about?
Well, I certainly didn't wake up one day and think I need to create a Bitcoin data analytics platform, because in 2017 they just didn't exist, and it's quite hard, I think, for you to imagine how things were back then. But when I first got into Bitcoin, there were plenty of opinions, right? There's loads of opinions, right? I could see what people were saying about Bitcoin, but you couldn't really find any data anywhere beyond just price data. And given my background, I'm used to making data-driven decisions. I was like, well, okay, I need to look at some data, but I couldn't find any. And I was like, this is really weird, actually. So there's loads of people talking about this thing. I can see the price, and I know there's a blockchain, right? So I know there's some data there somewhere, right? Because that blockchain is recording those transactions, but there was nowhere to take insight from it and actually look at analysis around it. So I thought that's really weird. Came across a website called blockchain.com, which still exists today. Don't know if you know it. It's like I think it's like a wallet and a Bitcoin Explorer. I'm not too sure what their core business is, but I think is that right?
It's actually founded in the city that I'm in currently, which is a little weird tidbit. It doesn't seem like the type of place, but there you go.
There you go. So anyway, thankfully that I came across that website after a lot of searching for data, and on a couple of pages that I think probably like only a handful of people ever looked at, it's like tucked away in their website, they did actually have some pretty basic transaction data from the blockchain. And I was like, okay, that's interesting. So I took that, started overlaying price data that I got from somewhere else on top of it, and just started trying to analyze it, really. And I started noticing a few trends, which I thought was interesting. And I thought, well, if I'm interested in this, there might be some other people who are interested too. I posted about it on Twitter. At that point, I probably had like 400 followers, right? Like I was just posting stuff, and a few people were interested. And then one day I posted a piece, and Willy Woo replied. And at the time I was like, what the hell? Like Willy Woo was one of the few people at the time who I looked up to, who was like, this guy kind of gets this idea about looking at data around Bitcoin. And I was like, what is he doing replying to me? And then he DM'd me and said, hey, great idea. That thing you just tweeted about, you should write a paper about it. And I was like, mind blown, right? Willy Woo is like in my DMs, like saying I should write a paper. And I was like, right, okay, I think I better write this paper then. So it's like a number of steps, right, that led up to the platform. So I wrote the paper, and then David Puel, who now who works at Cathie Wood's ARK Invest, and Murad, who is obviously the main character in crypto right now, right, with his meme thesis, who is, by the way, an absolute giga chad. He really is, and so is David. They're great guys. They saw the paper and said, hey, we're starting this Telegram group. Would you like to join? We love what you wrote. Come in and join. And I was like, yeah, sure. Brilliant, right? I get to talk about Bitcoin and data all the time. I'm in. And then that Telegram group was really the hotbed for most of the on-chain metrics that we know today, or derivatives of them, right? So for example, MVRV score was created in that group in like this glorious 9-month window where we were all just sharing ideas with each other. It was brilliant. It's like my favorite time in Bitcoin. We were all just bouncing ideas off each other. Like there was no egos or anything. It was brilliant. And we came up with like MVRV score, Puel multiple, R hodl ratio, delta top, like a whole bunch of metrics, whole bunch of on-chain metrics. And like I say, most of the metrics today are derivatives of what came out of that group. So then I started talking to David one day. He came to visit me in London. And I said, look, this is brilliant, but there's two problems with this group at the moment. Like, one is that a lot of the ideas we're sharing are just static, right? So someone would just share literally like a chart in Excel or something like that. It was just a static chart, or maybe even just a formula. And the second problem was that I was worried that a lot of these metrics we were building, and there was sort of some evidence emerging of it, were starting to be sort of siphoned off and, used by hedge funds or like go behind paywalls and stuff like that. And for me, the reason why I love Bitcoin is that it's open source, right? It's a complete leveler in terms of opportunity. It doesn't matter who you are, where you're from, you can access Bitcoin, you can benefit from Bitcoin. That's why I love it. And I wanted the same for all these analytics we were building. And so I said to David, look, I want to build a website where all these ideas are in chart form with an explanation underneath, and those charts just update automatically every day. And there's no paywall. You don't even need to enter your email. Anyone can just go to the website and access it. And that way, in the same way that Bitcoin's open source, these metrics will be open and available for anyone. He said, yeah, bro, sounds good. And I don't know, I sort of feel like I needed his seal of approval. And then I went off and created the website. So that's kind of the journey of how I went there. So I certainly didn't just come up with the idea. It was really a process. But I suppose the one thing I would say is that it taught me that if you're new to a space, the best thing to do is, rather than like consume information and just go and ask someone for like a job or something, just try and make something, just try and add some value somewhere. And for me, it worked out. It really obviously worked out very well in the end. So, yeah.
So you were in the secret inner circle of on-chain nerds and managed to make all of that information public.
Yeah,
like a Robin Hood of Bitcoin data.
It was a brilliant time. It wasn't that secretive. It was just that it was a group of us. I mean, eventually the group kind of got too big, and then I think it sort of lost its essence and its alpha. But there was that glory period of, say, like about 9 months where it was just great. It was just great. And then Look Into Bitcoin was born, and had no idea if it was going to be successful or not, but people seemed to really connect with that idea of us, helping people through data and it being available for free. And within a couple of months, we had to upgrade the servers and stuff because it was getting so many views each month. It was crazy.
Yeah. So apart from obviously providing all of this data freely and potentially being the first one to actually provide this data to the public, was there anything different you did with Look Into Bitcoin that really made Look Into Bitcoin stand out against any potential new and upcoming competitors or any pre-existing platforms? I know, of course, you said you're providing them freely, but what else did you do to help make Look Into Bitcoin uniquely stand out?
I mean, I think we were always trying to be like first with a lot of the metrics that would come through. But really, I think it was, we tried to, we were in the fortunate position. We didn't have any VCs to answer to or anything like that. It was really just me and a couple of other guys, and 100% owned by me. And so I could make all the decisions, right? And I think we set the industry standard for making on-chain analytics largely accessible to all. So, for example, I think if it wasn't for Look Into Bitcoin, in fact, I know if it wasn't for Look Into Bitcoin, a chart like MVRV Z-score would not be available to view for free today. It would be behind the paywall. And so, yeah, I think if it all ended tomorrow, that's hopefully one thing we're pleased about, is we've been able to help people in that way get access to Bitcoin data in the way that I think is right for Bitcoin, right? Everyone should have access to that data.
Yeah, very good. And I'm going to ask, why just Bitcoin? Did you ever consider making a look into Ethereum, for example, look into crypto? Why was it always just Bitcoin?
You know, I've had so many people DM me saying, hey, I'll sell you the lookintoethereum.com URL for $5,000. I'm like, bro, I'm not interested. Listen, I mean, there is no second best, right? As the mighty Michael Saylor says, but he says it from a crypto point of view. He's trying to make the comparison between Bitcoin and other crypto. But I just think of it more as in Bitcoin really is the most important innovation, right, of our generation, in terms of us living in a period where we have government overreach, corporations overreaching as well. And Bitcoin really gives us a way out in terms of a parallel system where you can control your assets. You can protect your financial freedom for you and your family and your community. And I think that's really, really important. I think people, certainly in developed countries, are still coming to realize that. And a lot of them still aren't there yet, but they'll get there. So for me, I just wanted to focus on Bitcoin. Nothing against any other crypto. I just wanted to focus on Bitcoin, but also, so that's the first thing. Second thing, Bitcoin's really the bellwether of the ecosystem, right? So Bitcoin's going up, decent chance that the rest of crypto is going to go up. Bitcoin's going down and you're not paying attention to what's happening with Bitcoin, good luck with what you're investing in the rest of crypto. So that's always been the case. It continues to be the case. So I kind of figure whether you're into Bitcoin or not, you need to pay attention to what Bitcoin's doing because it is really that bellwether for what's happening in the wider ecosystem.
100%.
Probably one more reason as well. Like startups are really hard, right? So like 80% plus fail. I would say in our industry, it's probably even higher because the bear market's so tough. So therefore, trying to spread yourself too thin, not a good idea. And in fact, there's been a lot of other analytics platforms that have been and gone because for that very reason, I think they tried to spread themselves too thin. They didn't have a clear point of view. So yeah, more, just as much as the other two reasons, it's just focus, right? You got to focus in a startup.
And as someone that's been within the Bitcoin space and industry for over 7 years now, has the industry changed a lot? Has Bitcoin as an asset, as its narrative, as how it's perceived changed? Obviously, with the ETFs this year and institutional and potentially sovereign state adoption, it's obviously growing in maturity. But how does it feel having worked in the industry? Are there any potential insights that maybe aren't as obvious?
I actually think up until last year, the industry was almost like willing itself to change, but it was still sort of within itself. And so it didn't really change that much. Not really. And I do believe, and we'll come on probably to talk about this in a little while when we're talking about future projections. I think we are now in a transition period where we're moving through from our adoption phase, which was the first 15 years of Bitcoin's life. We're now transitioning into the institutional phase. And we're in this sort of fuzzy period right now in between. So really, it was a year ago, I would say, where there was that genuine step change. And it was in the lead up to ETFs. And you could see that institutions were coming online. And so I think it's really just, in terms of proper change, real change, it has been the last 12 months. And there's no denying it now. It is different. And I think that's going to continue. And hey, look, it's just Bitcoin's part of Bitcoin's journey, right? In a way, I'm going to miss the part of I guess, there's a corporate sheen to it now, I've noticed. When I look at a lot of the industry, there's that corporate sheen that you get with large brands and things and institutional clients and all that, which is fine. But I kind of miss the edginess of the old days. And I hope that we'll retain the decentralized nature of Bitcoin, right? Because that's the most important thing in all of this. If we lose that in this transition to institutional, then that's going to be really, really sad. So we've got to actually do our part, I think, to sort of welcome in the institutions, but also making sure self-custody is still available and all that sort of good stuff.
Of course, yeah. And also on the topic of more substantial changes in the past 12 months or so, we ceased to be looking to Bitcoin within the last 12 months, and we have rebranded to Bitcoin Magazine Pro. Can you give us a little bit of insight into how that came about and what that means going forward?
Yeah, sure. So earlier this year, Q2 probably, the Bitcoin Magazine team got in touch. For anyone who doesn't know, Bitcoin Magazine actually run the biggest conferences in the world for Bitcoin. So, for example, if you heard Trump speaking about his Bitcoin plans, that was at Nashville. That is run by the Bitcoin Magazine team. Bitcoin Magazine also ran the Amsterdam conference last week, which you spoke at, Matt. We'll have to.
It was good.
Yeah. Oh, you seem to do a great job. So we'll have to chat about on another session. But that was a great job. So yeah, they run these huge conferences. They also have the physical print magazine and their website, news website, and they've been around for years, right? So they are well established in the ecosystem. And they said, look, we have this analytics arm called Bitcoin Magazine Pro, which is underperforming relative to its potential. So at the time, Bitcoin Magazine Pro was just a opinion-based articles format. So pretty simple. And they felt it was under-delivering versus its potential. And they said, look, how can you help us? Can you come on board and help out? And after a while, I said yes. And, fast forward a few months, Bitcoin Magazine Pro is now a fully fledged data analytics platform, thousands of subscribers, gets millions of views each month. So it's been, so far, touch wood, very successful. And the future's looking bright with the Bitcoin Magazine guys, who are great, really good guys to work with.
Yeah, I concur. Everyone I met at the conference was lovely and very optimistic about the future. And talking about bullishness on the brand, the company, we'll have a transition into bullishness on Bitcoin. You mentioned earlier on that you think we could be on the cusp of the bull cycle kicking back into gear. What gives you that kind of thesis? Are there any on-chain metrics in particular that you're currently watching? If you'd like, I can share some so we can kind of discuss them on screen as well.
Yeah, for sure. So listen, like I said right at the start, I think we are at a critical point here in the latest market cycle. I do think we are still going to have a 4-year cycle. So there's been lots of people I've noticed dodging that question. It's a tricky question. Are we going to have a 4-year cycle? Loads of people dodging it. I'll stand in front of the question. We are going to have another 4-year cycle. But I do think this is probably the last one. Reason being, as I mentioned, we're transitioning from that adoption phase of Bitcoin into this institutional phase. But I think we're still going to get one more run of the beautiful, clean 4-year cycles. So yes, we get another 4-year cycle, and we can look at what is going to be the fuel for the fire now, and how we're going to know when things are looking a bit hot, because this is a critical time, I think, to pay attention in the market. Not sure when this video is going to go out, but literally
in about 5 hours time.
All right.
Yeah.
So this is a critical time to be paying attention. So let's look at some charts. We're going to look at a technical chart first, just to give some context, and then we'll look at some global macro before then getting into on-chain stuff.
Sounds great. So just a technical chart of price action.
Yeah, if you just get up a standard chart of Bitcoin, if you can, here we go, look.
How does that look? Like a true professional.
There you go. Bitcoin price action, where's that going back to? Yeah, zoom in a little bit more so we can see what's going on recently. Perfect. Yeah, that's good. Back out a bit. Yeah, great. So, exactly. Yeah, that'll do. So look, people are sort of flip-flopping about where we are in the cycle, right? But it just is a little bit different to last cycle. But broadly speaking, we're in pretty much the place where we would expect to be right now for the amount of time we've gone through the cycle. So we're about 2 years in now, I think, from the bottom, roughly speaking. And if you compare that to last cycle, we're in pretty much the same place, right? The only thing that is significantly different is, I think, the inputs to some of the price action that has led us here from the bottom. Okay, so classic Bitcoin bottom was in, what was it, December 22, was it? FTX implosion. And sure enough, everyone's screaming, it's over. The whole space is a scam. Just like they said the previous cycle, it's over, Bitcoin's going to zero, right? We've heard it all before. And if you listen to people on Twitter too much, that's where you get caught out. Obviously, there's lots of data, like the metrics we show, that actually that was the best buying opportunity right there. Look at MVRV Z-Score, look at Investor Tool, loads of tools like this were saying, Puell Multiple was saying, that is the best time to be accumulating your Bitcoin. Sure enough, Bitcoin then rallies hard off the bottom, as we saw last cycle as well. The only difference last cycle, and if you're kind of new-ish to Bitcoin, as in like this recent cycle, past 4 years, you might not know what that big run up to 14K was in, when was that? 2019, was it? Yeah.
Yeah, June, July 2019.
Yeah. So that was not only the fact that Bitcoin was way undervalued and you get this reflexive move to the upside. Also, there was this thing called the Plus Token Ponzi scam, right? So the scam that came out of China, some Ponzi scheme, and they were using Bitcoin, and that was pushing Bitcoin price artificially up. And so you got this mega pump up, like way higher than most people were expecting, all the way up there. And then you got the hangover from that, right? And you got that selling, that sell-off, which then led also into that we're not connected in any way, but then we also had the COVID crash, right? It was that mega crash. Everyone on leverage on BitMEX got wiped out. And yeah, then obviously we rallied off those lows. So you had those two things last cycle, which make that chart look like that. But if you recognize that they were two very sort of, I guess, specific, almost like black swan freakish events, you take them out and you look at this cycle, it's pretty much the same trajectory, right? You kind of basically got it moving up from the lows. Now, what happened this cycle, which was different, was, of course, the ETF announcements, right? So that was what pushed up. It happened a little bit later than the Plus Token Ponzi, and was obviously sort of positive, net positive for the industry. That's what pushed us all the way up to 70K. Now, if you'd have been listening to a lot of people on Twitter around that top around 70K, they'd have been telling you that Bitcoin was going to go to, 100K next week, $500,000 the following month, right? If you look at the data, for example, funding rates was a great thing to look at then. We talked about it a lot, BM Pro. You could see funding rates were way too high, right? People were way levered to the long side on derivatives. What happens then? They're going to get flushed out. And that's pretty much what we've had now the past 7 or 8 months, is that flush out period. So that is really, we've really just had the hangover of that. And so whilst people have been panicking, there was no reason to panic. It's just because we got drunk on people saying Bitcoin's going to go to 250K next week when we were topping out at 70K, right? So again, use the data and you can actually get a much clearer picture of what's happening, because at the recent lows, still using funding rates, we were getting negative funding rates. And what do we know in a Bitcoin bull market? When you get negative funding rates consistently, that's a pretty good buy the fucking dip opportunity, right? So sure enough, what's happened since those negative funding rates? Price has rallied to the upside in the past few weeks. All right, so that's really like a bit of a run through of where we're at in the cycle. And if you ask me, that's pretty good going. Like, we've basically had a really nice run up from the lows. People got overexcited by the ETF. So we've through that euphoria, and now we're kind of reset. We've had 7 or 8 months of just hangover. That has cleansed the market. We've had negative funding rates. And when we look at some of the other charts coming now, you can see that actually, the scene is set to really take that next big move up that I think is probably going to send us, comfortably above 100K as we go into 2025.
So you'd imagine we're probably, I don't know if you can see the chart, somewhere in this area, if we were to compare previous cycle to current cycle, once we've had the COVID recovery, but prior to the big run up, where again, we're having this choppy consolidationary price action before hopefully we kind of kick off the latter stages of the cycle.
I'd say we're probably close to that, but a touch higher up. So if you zoom out, if you just zoom out on that chart a little bit and you look at the previous all-time high, you can see it was about 20K, right? And I would say we're about 20K on the way up. You see, we had that consolidation just after the period where you were, if you zoom in a bit now to that, I think we're about there, right? Because we're at the previous all-time high. And when we look at some of the on-chain data later, we're going to see that that is where some long-term holders tend to realize a bit of profit, right? And so that's been bringing extra supply onto the market during this hangover period. That's why we've had this consolidation, or one of the reasons why we've had that consolidation. But once that's done, and I think it's pretty much done now, that's when we go higher. So yeah, I'd say we're
are there any other charts you have to kind of reflect this theory to kind of reassure your basis on this?
Make sure I'm not just talking nonsense. So yeah, let's look at, so let's start with macro, because you always got to start with a zoomed out view, and then we'll zoom in, right? If anyone takes you to like low time frames or just straight into on chain, you've got to be questioning why they're doing that. So let's go and look at global liquidity, which I think is probably the most important chart for Bitcoin, right? So global liquidity, people might have heard people chatting about it on Twitch at the moment. It is a bit of a buzzword or buzz term at the moment. It is essentially government controlling how much money is in the financial system, right? So whether it's just pure cash or convertible assets to cash, it is how central banks kind of turning the tap on and off at different times, influencing how much money is going in and out of the global financial system. And that has an impact on assets around the world, right? Not just Bitcoin, but it impacts all assets, because if there's a lot of money in the system, that money's got to go somewhere. And a lot of people will say, well, hey, I'm going to invest that money, and they'll put it into riskier assets to try and get a higher yield on it, right? It's a very sort of crude way of explaining it, but it's kind of what happens. And is it relevant for Bitcoin? This chart kind of shows you that it is relevant for Bitcoin. So this is looking at global M2. So M2 is the money supply or global liquidity. It's the same thing. That is the blue line on the chart, and Bitcoin price year on year is the black line on the chart. Okay, so they're both showing year on year of their own data. And what you see is when one goes up, the other one goes up as well, right? So when global liquidity is going up, Bitcoin price year on year tends to go up as well. Yeah, so year on year global liquidity trending up, Bitcoin year on year going up. I guess there's clearly a relationship there. And why might that relationship be there? You could probably spin on to the next chart now, just pure global liquidity. If you think about it, Bitcoin benefits from global liquidity going up for two reasons. First reason is that, as I mentioned, there's just more money in the global economy, right? And people are saying, right, I want to put that money somewhere to use somewhere where I'm going to get a good return on it. And it finds its way into the stock market, it finds its way into property, and it finds its way into assets like Bitcoin. Bitcoin's perceived as a risk asset with a high return historically. So, you know, it makes sense that a lot of that is going to go into Bitcoin. But Bitcoin also benefits because it is a hard asset, right? So this is the bit that I'm not sure everyone always talks about. Bitcoin's a really hard, it is the hardest asset, right? It's got a fixed supply schedule. It can't get inflated away. And so in a period where central banks are just printing more money and like, you know, essentially creating inflation, making currencies like not worthless, but devaluing their currencies, people are going to hunt out harder assets, right? And Bitcoin's, you know, about as hard as it can get. So it's like Bitcoin gets this double kill benefit from global liquidity increasing. So that is why global liquidity is important for Bitcoin. What is happening right now is on this chart. So at the moment, global liquidity is making new all-time highs, right? So the blue line you can see is just in the past few months, whilst Bitcoin's been in this post-ETF hangover period, has been making new all-time highs. Now you might say, well, why is Bitcoin not suddenly rallied off? Well, a couple of reasons. One, these things take time, right? We're talking about global liquidity, right? It takes time to work through markets, but also Bitcoin has been in this hangover, right? It's been in this period where long-term holders are selling, right? Where derivatives traders have had to get wiped out. So you've kind of had that going on as well. And I think that's why, even though global liquidity's gone up, we're not yet seeing Bitcoin price follow. But if you look at previous cycles, Bitcoin price does eventually follow, right? And starts to move into a bull run, which I think we're going to see now as we go into Q4 and into Q1 2025.
Very bullish, very nice. So you said that macroeconomics and this kind of broader perspective is the basis of how you analyze Bitcoin. But then going a little bit deeper than that, are there any on-chain metrics that you're specifically watching for where we may be in the cycle?
Yep. So I think there's probably 2 or 3 we can look at, right? There's always a temptation to look at too much on-chain data, derivatives of different similar things. So we'll just try and look at a couple of key charts. Before we move on from global macro, the other thing I would say is we have Fed rates coming down as well, and the anticipation that more Fed rate cuts are coming as well. That's the important part. So Fed cut rates by 50 basis points last month. You can see that on the chart there, that dropped that down there. First time since 2020, since the COVID crash. So that is the first time in 4 years, and people are anticipating more rate cuts coming, plus global liquidity making new all-time highs. From a global macro point of view, that is like chef's kiss in terms of like the backdrop, right? So macro is looking great. Obviously, it doesn't mean guaranteed that Bitcoin's going to rally up, but it certainly sets a very favorable backdrop, right? When we're looking at what are the external inputs into this bull run.
Certainly makes it easier for Bitcoin to run when everything else is supporting a bullish thesis.
That's right. That's right. So it gives Bitcoin a bit more fuel to the fire, you could say. But yeah, let's take a look at some on-chain stuff. Let's start with thinking about long-term holders, right? What are they doing? Let's think about the smarter money in the system. And the best metric I think to look at for this is the 1-year HODL wave. Okay, and I'll explain why 1 year and not like 5 year or 7 year or something like that. So the 1 year HODL wave is looking at the percentage of Bitcoin that has not moved on chain for at least a year, right? So it's just that sat there in someone's address or someone's wallet, hasn't moved, right? And that means they're not selling it, right? So if it's just stayed in the wallet, it's not been sold. And what we tend to see with the 1 year HODL wave is that this is like a proxy for smarter money in the system who are playing Bitcoin's market cycles, right? So you get to see when they're accumulating and then when they start selling as retail, new money, FOMO in late in the cycle. These guys are kind of selling to them because they're like, great, I accumulated this Bitcoin on the cheap in the bear market lows. I'm going to realize some profit. Doesn't mean they're selling all their Bitcoin, right? They might have a long-term 10-year HODL wave stash, right? But they're starting to cash in now. And yeah, exactly. As you've shown on the chart here, if you look at, say, the 2016-17 cycle, it's a particularly clear one, the 1 year HODL wave goes up in the bear markets as these guys are accumulating Bitcoin and they're holding it, waiting for the bull run to kick in later, and then they'll sell at a higher price. Okay, so the 1 year HODL wave is like an inverse relationship to price, right? So as price goes down in the bear market, the 1 year HODL wave goes up as the percentage of Bitcoin that hasn't moved on chain increases, right? As these guys are holding, right? Then as Bitcoin runs up to a new all-time high, that 1 year HODL wave starts to come down. And we've seen this a little bit with the recent run up to 70K, right? If you look at the recent data earlier this year, you can see we did get that little sell-off as, you know, the 1 year or the longer term holders started to realize some profit, right? New all-time high, I'm going to realize some profit. However, what we know historically is that most of the selling happens later in the bull run, right? And I think we're going to really start to see this metric come down once Bitcoin breaks above 100K. Okay, that's when I think a lot of long-term holders are waiting for that to then start realizing more profit. So at the moment, we've had this hangover period where it's just sort of been flat. But yeah, my expectation is as we go into 2025, like we saw in previous cycles, you're going to see it come down. If we get a parabolic run like we did in 2017, you're going to see a pretty steep, consistent drop down. So yeah, this is definitely the chart to watch to understand what are the, I guess you could call them the smarter money. What are they doing with their Bitcoin, and how quickly are they offloading onto the fresh retail coming in?
So is this a big basis of your strategy? Do you try and accumulate a lot during the end of bear cycles and distribute at the top of bull cycles? Are you playing the market a little bit more frequently than that with some intra-cycle trading? How are you viewing the market, and how's your personal approach to this?
First thing is everyone should make their own strategy, right? So do not follow anyone else, do not copy anyone else, sort of educate yourself and then get your own strategy. That is like the most important thing to do in this space. Personally, for me, I have like a never touch stash, and I understand the volatility of Bitcoin's market cycle. So I have another amount which I operate a bit more in the way that we're discussing here, right? So accumulate in the lows, sell some, and manage risk as we head towards the cycle highs. So that's my personal strategy, but everyone needs to work out what they want to do, what works for them.
Keeping it simple. I like how you marked your buys and sells on the chart with the green and red little shaded areas.
I wish. No, certainly not a sniper when it comes to identifying the tops and bottoms. And you know what I think is really important, actually, that you don't try to. I think I've seen a lot of people really get muddled up in previous cycles when they've tried to pick the Pico top and the Pico bottom. It's a fool's game, and as long as you're broadly right, broadly, somewhere around the bottom, broadly somewhere around the top, you're managing your risk, and broadly somewhere around the bottom accumulating, then you're going to do just great, because Bitcoin is such a strong asset that is still going through that adoption phase, that you're still going to benefit very well with a simple strategy like that.
100% scaling in and out not only reduces the stress and anxiety with timing the market, but it's just so much easier and simpler, and then almost not guarantees, of course, this is investing, but gives you a much higher probability of scaling in heavily at the bottom and the top, rather than letting your emotions kick in and getting a little bit carried away with FOMO either side of the market. So yeah, exactly. I know you said, oh, go on, sorry.
No, I mean, you're dead right on the emotions, and I think that's the biggest thing in this market, where people have really sort of lost their minds, literally, but unfortunately lost the shirt on their back sometimes, because if you only listen to the influencers on Twitter, when price is topping out and they're screaming that price is going to go 10x higher next week, that's when unfortunately people start taking risks that are too big, right? Start taking out an overdraft, remortgage things, and that's when you can really get into trouble. So have some basic strategy, have some basic tools that help you ignore all that garbage noise that's going on out there when the market is screaming at you, because it will scream, when we're at those highs. If we get a parabolic run like 2017, people will be losing their minds.
Are there any metrics you're looking to in particular to try and help you see in a data-driven approach when we're maybe reaching the highs? I know obviously you can see the sentiment of greed and everything on social media, but is there any on-chain points that you're saying, right, when this reaches a certain point, we're very overheated?
Yeah, there's quite a few that you can look at. I'll just try and show one or two, but certainly if you sort of explore more, there's others that you can look at, but just be careful if you do look at others that they are using metrics that are separate from the other thing that you're looking at. I see a lot of people saying, oh, this chart's showing this chart's showing this, but actually all three are the derivatives of the same underlying metric. Anyway, let's look at a chart called cycle capital flows. And if 1 year hodl wave is really looking at the supply that's going to come onto the market by the long-term holders selling as retail comes in, this chart is showing us the demand influx that is going to be buying those coins off the smarter money, right, this cycle. So these two charts side by side are actually, you could argue, are kind of, you don't need much else. But in terms of understanding that sort of supply demand dynamic that's going to happen as we move further into the bull run. All right, so this chart is looking at the realized hodl wave of addresses that have held Bitcoin for less than a month. Now, I know that sounds like a mouthful, right? And you're like, what the hell is that? So if you just focus on that one, yeah, exactly. So leave it like that. The way this is like realized value, right? So this is the cost basis, the entry level of different participants in the market. And at the moment, we're looking at the realized value for addresses that have held Bitcoin for less than a month. Okay, so it's kind of like how much wealth is being held by these guys in proportion to the rest of the market. And what you see is in the bull runs, so look at 2017, you got this massive spike up, right, to over 50% or over 60%, I think at one point. Is it on the chart? The high, what did it top out at?
66.4.
There you go.
67, yeah, around there.
So that is how much of the cost basis value is being held by what addresses that had only held it for less than a month, right? So that shows you the pure FOMO. This is like, think of this as like the FOMO chart, and it's showing you how much FOMO, how much people are racing in who don't know much about Bitcoin. They're diving in just to try and accumulate it because they've seen it on the news. They've seen influencers saying it's going to go to $1 million next week, and they're FOMOing in. And so when this gets too high, that's like a real sort of red flag, right? You want to be watching out at that point. And we saw the same or similar last cycle, where it actually peaked out at about in that run up to, was it 40K? And then it lowered down a little bit. But basically, this chart is not trying to be an exact science. It's just trying to show you when is like hot money coming in and when do you want to start thinking about managing risk. And I would say once this gets towards 50%, you want to be paying attention, right? And if you compare it with the 1 year hodl wave, you're probably going to see, the 1 year hodl wave going down steeply as this is shooting up, because those guys are offloading onto these guys. One other thing I would say on this chart, you got the little spike there where the ETF launch happened, right? When we ran up to 70K. That's pretty comparable to the Plus token Ponzi we spoke about. That run up to, what was it, 14K back in the previous cycle. It went a little bit higher, but not for long. So I sort of feel like we've had this same sort of initial test pump, if you want to call it that. But I don't think we've had, I don't know if you've got a sense of this, but I don't feel like we've had fresh retail coming in at scale yet this cycle.
No, I think this is similar to what we've seen in, well, every cycle, where we have this initial run up off the lows when people first start hearing about Bitcoin. Oh, it didn't die. That's interesting. I'll start looking into it again. And then you do have this first kind of FOMO phase, but then you usually have this reset period, which we're in now, where Bitcoin usually cools off. Historically, this is also aligned with halving events as well. And then it's only afterwards, again, once we start breaking new all-time highs once more, that you see the second run of that. Not only did it not die, but now it's once again reaching values it never has before. Why didn't I buy the first time I saw this? And that's when you get the second run in of flows that, again, you see in every single cycle.
Exactly. And I don't really see a reason why it would be different this cycle. Obviously, there's always unknowns, in the same way that the COVID crash was an unknown, like Black Swan event. Something like that could happen. But, given that we can't see into the future, there with ETFs now, institutions coming online, I just think you're going to have boomers this wave as well. It's just, as well as standard retail coming in, you're just going to get that influx. And I think it might actually surprise people, because we've had this 7 or 8 month period of Bitcoin not doing much.
Yeah. So next, I'd like to discuss a metric that you yourself are famous for making, and one you mentioned earlier, which is the Pi Cycle Top indicator. Can you give us a little bit of background into how on earth you managed to figure this out, and what are your kind of insights into how it may work or not work this cycle?
Okay. I wish I had a Bitcoin for every time someone asked me to explain this. I've not explained it because it takes a bit of, there's a few steps to how I got to creating this indicator. So I will try and summarize it briefly. It was 2018, I think, when I created this. It was around that time I was in that Telegram group with Murad, David, Puel, Willy Woo, and others. And Bitcoin obviously has these 4-year cycles. We've been talking about them. They're kind of undeniable in this adoption phase of Bitcoin. They won't last forever. But the past 15 years, we've had these nice, clean 4-year cycles, which got me thinking, okay, from a cycle theory point of view, maybe mathematical pi could be something interesting to play around with, okay? We also noticed that Bitcoin's 1-year moving average was very important for Bitcoin. So when Bitcoin breaks above its 1-year moving average, it kicks into a bull market, breaks below it, it's in a bear market, okay? And Murad had been doing some charts at the time, really clean charts, I remember, where he was using sort of like round numbers. And so instead of the yearly moving average, he used the 350-day moving average, just sort of nice and clean. And he'd have like the 500-day, the 600-day, stuff like that. So that was the second thing. So pi, yearly moving average, or the 350-day moving average. And then I'd created the Bitcoin investor tool, which takes the 2-year moving average to kind of chop off the bottom of Bitcoin's bear market lows. Yeah, that green line there, 2-year moving average, brilliant time for accumulating because everyone else is panicking, saying, oh my God, Bitcoin's over. Actually, when Bitcoin went below its 2-year moving average, great time to start accumulating. And I thought, well, okay, if I can use that to identify when it's great to accumulate, if I have multiples of that value, then that might identify a good time to manage your risk towards the tops, right? Hence created the Bitcoin investor tool using a multiple of that 2-year moving average. So those are kind of the 3 inputs to pi cycle top, right? If you go back to that chart now. So we've got pi, the 350-day moving average, and this idea of multiples, right? To help you manage risk, okay? And so I was just playing around thinking, if I put these together, like what happens? And I had this idea of if you have a multiple of a high time frame moving average, like we just spoke about, and then a lower time frame moving average catching up with it, that's going to tell you that Bitcoin's price is going parabolic, right? Because that's how moving averages work, right? One catches up with another one because price is going up like that if you've got a multiple of a higher value one. And I thought, well, that's kind of a cool tool to be able to manage risk, right? Which I hadn't seen before. And I then thought, well, okay, what number gets you to pi if you divide in 350, right? And the closest whole number you can get to pi is 111, right? So 350 divided by 111, I think, is 3.153 reoccurring, I think.
Yes.
Thereabouts. Yeah, okay, good. Oh, well, okay, spot on. So I thought, let's try those 2 moving averages, see what happens. And I charted it. I can actually still remember the moment I charted it because it was just pure disbelief. I did not create this indicator to try and pick out the tops. I was creating it just as a risk management tool to tell you broadly when the market's getting overheated. And yeah, I remember staring at the chart and I looked at the 2017 top first because this was in 2018, remember? And it picked it to within a day. And then I looked further down the chart and I saw, again, like pretty much bang on, you know, very close to being bang on. And yeah, I was in disbelief. And then so it was almost like an accident, really, how I created it. But then we put it on the site, and last cycle, it was by far and away the most popular chart. It was getting like tens of millions of views. It was on loads of other sites as well, because it's, you know, people can obviously just replicate it. And yeah, everyone was saying, isn't it going to work in 2021? And of course it worked. So that's it.
Of course it worked. I wonder how many people saw this cross and actually took action, or if people went, oh, wow, what a funny coincidence, but we are going to 100K.
Yeah, right. And, you know, people always ask me, like, is it going to work next cycle? And I have no idea, right? You've got to remember, people who make metrics like this, they make it, but they can't see into the future, right? So do I think it's going to work this cycle? I think it might, because this is the last 4-year cycle, but it might not, because we are in that crossover period with institutions coming on board. So what I would say is, don't just rely on one metric. You can use tools like this to generally manage your risk as those two moving averages are coming close together. But I wouldn't rely on any single metric, including this one.
Do you think that's the biggest mistake people make, just focusing on single points of data? Because obviously, well, the first mistake, people are going to be relying on emotion and Twitter gurus to give them their analysis and tell them when to buy and sell, and that almost never works. Second point, maybe people are too hyper focused on one or two metrics and maybe miss the forest for the trees, waiting for one moving average crossover or one Z-score reaching the top zone. Do you think that is the biggest mistake? People should be taking into consideration more data points, or do you think there is a point in which there's an over complexity and people do need to kind of keep it simple?
Yeah, it's definitely a balance, right? I think you hit the nail on the head there. You can either go too extreme one way or the other. I see a lot of analysis which is way too complicated for like plus 90% of people, and also unnecessary. But then you can also, just say, I'm only going to sell everything when it gets to this point. And that's just not a great way to think about it, right? Don't try and profit maximize. Like, realize that this is a process. It's one thing in life, and probably scaling in and scaling out is a smarter way to approach it long term. And you'll still do very well. You'll still do very well. But so yeah, I think scaling in and out is probably the way to avoid getting hung up on single bits of data.
Unless we get another pi cycle cross top this cycle.
Yeah,
When
I'll wait till it crossed and then sell everything.
So you've mentioned a few times that you foresee this to be the last 4-year cycle, and you can see, especially due to the institutional influence, Bitcoin maybe changing in terms of its corporate shininess. How do you think on-chain data is going to change to maybe reflect all of that? Do you still think it's going to be as useful as it has been historically, or do you think we maybe need to analyze on-chain data slightly differently?
I think that people are realizing, particularly our institutional clients we speak to, I think people are realizing that on-chain analysis is great. It is fantastic, but it's just one piece of the puzzle. So people are recognizing that as Bitcoin grows, it no longer operates in isolation. It is part of the global economic system now. It is part of the wider financial system. And so you have to be looking at other data sources like global macro. But not only that, you also need to look at what's happening in the derivatives market, what's happening with ETF flows, and you need that to have the complete picture. And I think, last cycle, there was on-chain became a very exciting thing because it was new. It was a new form of economics, really, I believe. But a lot of VCs invested in analytics firms, and that, I think, almost artificially inflated the importance of on-chain analytics. And whilst it is crucial, it's just one piece of the puzzle. So I think that's how people are sort of learning how to work with on-chain data, is not just hang your hat purely on that. And I think that's definitely the right thing to do, to look at all the pieces of the puzzle. I would say people are also realizing, this is like a secondary point, that low time frame on-chain analytics is pretty much ineffective. It's kind of garbage. But there are platforms that will try and sell you that for a lot of money. If you want to look at low time frame stuff, you're much better off looking at things like derivatives data, right? Because that's where a lot of the trading is actually happening, right? So yeah, on-chain data is really effective when it's high time frame stuff. So just be careful if someone's trying to sell you anything different to that, lower time frames.
So do you foresee Bitcoin cycles becoming more aligned with, say, global equity markets on an 8-year cycle? Or do you think that we're going to maybe decouple and become a hedge asset like gold? Or how do you see Bitcoin being an asset in the next cycle?
I think that I think we're going to lose the 4-year cycles. And and it's going to take people a bit of time to figure out, because this is uncharted territory we're in now. So I think it will operate like a commodity, like gold, I think, but one that probably is in sync to an extent with equities. But I think there is always this risk of some really extreme government regulation around Bitcoin, which could just knock it out of sync for a period of time. Unfortunately, potentially, there's a possibility that might not be a good thing. We could enter a sustained bear market longer than the ones we're used to. You just have to think through all the possibilities. I know that's not what anyone wants to hear, but it is possible.
So something that people might want to hear, which I know you're not going to be over the moon to give a price prediction for a cycle peak, but is what everyone likes to hear. Do you have some price range that you're kind of anticipating Bitcoin could top out at in this cycle, assuming you're going by the 4-year cycle theory again, maybe sometime in about a year's time, late 2025? Do you foresee 100, 200, 500K Bitcoin?
Okay. Let's start with MVRV Z-score. I can see you got that chart up here.
Yeah.
It's a great chart to show, actually, because I think, if there's one chart you're going to focus on that's on-chain based, this is a pretty good one, right? If you're trying to play the cycle. So this is looking at the market cap of Bitcoin relative to the realized cap, right? So which is the cost basis, the average cost basis, the average price at which everyone bought their Bitcoin. Okay, that's the blue line on the chart versus the market cap, which is like the price, the black line you can see. And what MVRV Z-score shows us is when the market price moves really far away from the realized price. So people's entry level, when does market price move really far away from that entry price? Basically saying, when is everyone feeling really flipping rich, going, Mom, Dad, I'm going to be a billionaire, it's amazing, all that stuff. That's what this chart shows us. It shows us when people are getting overexcited. That Z-score, which is a statistical technique, basically to separate the extremes in the data between realized price and market price. We get that orange line moving up into the pink zone at the top of bull market highs, right? So that is when market price is too high relative to people's cost basis, market's getting too frothy, you need to start managing your risk. And then inverse, right, with the green zone, that's when it's great to accumulate. All right, so that's MVRV Z-score. Really important to watch this cycle. You can see currently, right now, to start answering your question, we've gone from a score of about 3 and we've retraced back down to below 2, right? And this has been that hangover period I've been talking about. I think we're through that hangover period now, and we're going to start moving up. And look, you can look at previous cycles, right, to get a sense of how much higher we've got to go. I think whilst we're not necessarily going to enter the red band, who knows if we will or not, we don't know how extreme this cycle is going to be. I think there's a very good probability with fresh retail coming in and then long-term holders selling to those guys, we're going to get a score of +5, 6. So what I would say is I want to be checking back in, having a conversation about where we're going to top this cycle when MVRV Z-score is around a 5 or a 6, right? Because that's going to, by that point, let's see where price is at then. Is it over 100K? I think it's probably going to be over 100K. So I don't want to give a specific price target. We'll look at the metrics at the time, but because I know you're going to be disappointed if that's all I say. What I will say is I think a range of based on various metrics, we're looking at a range of anywhere between 150K and 250K. I think is quite realistic for this bull run. One other thing I would add to that, so that is like my sort of like base case, if you like. I think that's reasonable probability that somewhere within there we're going to go this cycle. What I would say, and I think this might catch a lot of people out this cycle, is that last cycle we had a rounded top, right? And I think a lot of people still have a bit of PTSD from that because everyone thought we were going to go to 100K last cycle and we didn't. We just had this casual round off as MVRV score just tapped 7, rounded off, and that was it. Whereas the cycle before that, and I remember because I was fairly new in Bitcoin then, we went right up like a fucking rocket. We went from 10K to 20K. Most people forget this in less than 2 weeks, right? So we doubled the price of Bitcoin in less than 2 weeks. And that's why it's not impossible, right, to try and call a top, especially if we do get another blow off top like that. This cycle, that could send us way beyond my base case. So do I think it's feasible that we get into 300Ks? Yeah, it is. If we get a proper blow off top, that is possible. As crazy as it sounds around here, at these levels of whatever 65K right now.
Interesting. Just one way, I guess, we can almost quantify what a 5 or a 6 on the MVRV would look like. At the minute, the realized price is probably around $33,000. So roughly multiplying that by 5 or 6 would be between 160 and 200K. But then you have to take into consideration during the latter stages of bull cycles, this realized cap starts increasing exponentially as well. Therefore, that multiple of 5 or 6 won't be a 32K, it might be a 40, 50, 60K.
Exactly. Because you got that new money coming in, buying at higher prices. And I don't think we've seen any of that frenzy, really. We saw that frenzy for like a week or two around the ETFs. But yeah, if we get it like it was in 2017, things could get pretty wild. But so it's important to manage risk and look at the data when that happens, because everyone will be losing their minds if that does happen. If that does happen. Okay, so I know we've been chatting for probably an hour or so now. Do you have any closing thoughts? Do you have any other metrics you'd like to quickly mention before we call it a day, or anything else you'd like to include? No, I mean, I'd just say to anyone who's fairly new in the space, look, shut out the garbage noise that you get from influencers on Twitter. Invest in yourself, educate yourself, and make some data-driven decisions, right? Whether that's on Bitcoin Magazine Pro or any other platform, right? It doesn't matter. Just educate yourself so that when the time comes, when things are getting noisy, you're able to control your emotions. If you can do that, then you'll do really well this cycle.
Perfect. And can I be cheeky and ask if there's any discount we can offer people that made it to the end of this video?
Yeah, sure. If you made it to the end of this video, we'll give you a 35% discount.
Wow, generous. 35%.
Yes.
Amazing.
Yeah, 35% discount, and we'll sort out the QR code or whatever when you do the final edit of this video.
Amazing. Well, thank you very much for your time. Oh, go on.
One more thing. Yeah, one more thing. Obviously, it's the first time I've done a video like this. Was it useful? Was it helpful? Was it in any way interesting? Let us know in the comments below. And yeah, what do you think is going to happen this cycle? Let us know in the comments.
You've just done my outro for me. So great. Thanks for that. Yeah, hopefully people enjoy it. Maybe we can do it again in the future. So great. Thanks, Phil. Thanks for joining me. And thank you all very much for watching. And we'll see you in the next one. Bye-bye.
Nice one. Cheers, Matt.